Hello everyone, welcome back to my channel. My name is Aseem Singhal and today I'm going to talk about one strategy. It's a trend following strategy. That means I can get a very good trend and that is why I'm using the Heiken-Ashi candlesticks. And in this I use moving average which will give me the direction, and I also use a pattern which is the wedge pattern. So we'll talk about how we're going to take the entry, what can be the stop loss, what can be the target, and generally you will notice that you will get a very good profit in this strategy because there are a lot of confirmations before the entry. So we take confirmation from the wedge pattern, from the Heiken-Ashi candlestick, from the moving average, and I will also show you an example of how we are going to add the RSI divergence here. But as usual, before we go further, make sure that you smash that like button and subscribe to my channel. So let's start the video. So let me tell you the rules of the strategy. I'm going to use Heiken-Ashi along with the 50 EMA. In this, I only use two indicators, which is Heiken-Ashi and 50 EMA. But along with that, I also use a pattern, which is the rising wedge pattern. I'll tell you what that pattern is. And I'll then show you some examples. We will also look at some examples on Nifty. So as we know, Heiken-Ashi is a candle type in which if it's able to predict the trend very properly. So if the market is going up, you will see only green candles. And if the market is coming down, we will see only red candles. So that's the general idea. That why we are using the Heiken-Ashi, and we are using EMA because we know that EMA acts as a very good support. So if the market breaks EMA on the upside, we'll go for long entry. If it goes from the downside, we'll go for the selling entry. So you can just add the indicator. You can use the moving average exponential, and then you can just change the candle type to Heiken-Ashi and your setup is done. So let's start. So the first thing that we have to do is we have to see that if we can find a wedge. Now, what is a wedge? If we talk about a rising wedge, then this is the kind of pattern, something like this. That means the higher highs are a little they are not very steep, but the higher lows are more steeper. So this is how the pattern looks like. So I've shown you here that we get the highs are not going as fast up as the lows. So that's the first thing. So if we get this pattern, then we can go for a selling entry. And when we will do the selling entry, when the candle breaks both the lower part of the wedge as well as the moving average. When we do that, we can go for a selling trade. So this is the setup for the selling trade. Let's see some examples. So in this, I'm showing you Tata Power on a 15 minutes time frame. As you can see, the first step is we look for a wedge and we've got the wedge. So basically, I'm just trying to touch more of the closing prices. So I've touched 1 point, 2 points, 3.4 points and 5 points. So I've touched 5 points on the top and about 3 points at the bottom, at least 3 to 4 points. That means my wedge is done. And we've got this pattern. This is the wedge pattern. This is the rising wedge pattern. And once I've got that, I am looking for a candle, a Heiken-Ashi candle to break two things, both the wedge as well as the moving average. So you can see the moving average is also there. This is where it breaks it. So we can go for a selling trade here and we can take a very small stop loss. Generally, you will see since the contraction is happening, the stop loss will be small and we can go for at least 1:2 or 1:3 kind of a risk to reward. So this is how you can go for this entry. Currently, I'm showing you the selling entries. Let's take one more example. I'm showing you on Avenue Supermarkets. Again, the first step is to create our wedge. We've been able to create the wedge here. Once we have created the wedge, we are looking for the candle to break both the wedge as well as the moving average, which it does here. I can go for a selling entry with a small stop loss, and you can again see we can get a profit of almost 1:2. Let's take few more examples, and then I'll show you buying example also. So again, we are able to find the wedge here. We are able to find the wedge. I'm showing you on Bharti Airtel again on a 15 minutes time frame. You can do this strategy both intraday and positional. If you get a morning entry, we can do it in intraday also. But if you get like a 2 p.m. entry, you can just hold the trade for positional also. So again, we can see the wedge, a very clear wedge happening and a breakout happening somewhere here. And I'm getting a double confirmation because of the wedge as well as the moving average breakout. I'll take a sell trade with this high as the stop loss, and again you can see I've got a 1:3 kind of a risk to reward. Let's probably take few more examples and then I will show you one buying example on Nifty also. Again, you can see that I've shown you the wedge on the Delta Corp. So I've got the wedge here, a proper wedge pattern formation. And then as usual, we have got the breakout, and the breakout has done both the moving average as well as the wedge breakout. I'll go for an entry here with this as the stop loss. And again, you can see that the wick would have actually given us a 1:3 profit also. Let's take one last example. In this, I've also added the RSI divergence. I've also added. This is again, just if you want more confidence, you can add the RSI divergence. It's not really required, but this gives you even more confidence. So here you can see that I'm getting the rising wedge, and the candle is breaking the moving average. And along with that, you will see that there is divergence in RSI. So what is the divergence? If we match the highs are coming down in RSI, but at the same time the highs are actually going up on the charts. This is a divergence also. So a lot of things are pointing towards a downfall. So we can go for a selling trade, and you can clearly see that we've got a good trade and good profit. So this is how you can trade this pattern. I'm again showing you one last example with the RSI divergence also. So again, the first step is to find the wedge. So we've got the wedge. It's not a very perfect wedge, but anyway, it's a decent kind of wedge. Our perfect wedge would have been something like this. And we can see that the RSI divergence is pretty strong. This is going much deeper compared to the charts. We would have taken the entry somewhere here with this as a stop loss. And again, the market kept falling down, would have given us a good results. So this is how the strategy works. Let's also see one example on Nifty. And now I'm going to show you a buying example. So the first step is, let me show you what all I've added here. So I've converted the candles into Heikin-Ashi. I'm doing it on a 15 minutes time frame. And I've added the 50 EMA. So my setup is done. Now the only thing that I'm looking for is a wedge. So this time I will tell you the bullish wedge. So for that, if you see here, this is the kind of wedge that is happening on the top. But if we see that bottom wedge, so if we see the bottom support, it's not that steep. So this is like a wedge formation happening. And now when will I take the entry? Once the candle breaks both, so maybe this candle, so it breaks both the wedge and the moving average. So both the wedge and the moving average are broken. So this is where we can go for an entry somewhere here. This can be my entry, a buying entry this time. I can go for the stop loss here, which is the previous swing. This can be my stop loss on Nifty. And you can see that I would have gotten a very good trade, maybe a 1:3 or a 1:4 trade. So this is how I trade this strategy. So a lot of things give me a confirmation. First, there's a wedge breakout, and then I'm getting a green candle on a Heikin-Ashi, which is again a bullish sign. And it is also breaking the moving average. We also saw how you can add the RSI divergence if you want, but I don't think it's that required. I just give you an example so that you can get more confidence. So you can test it out and let me know your views. So I hope you liked the strategy. We saw how the combination of Heikin-Ashi, RSI, EMA, and the wedge can give us really good entries. Do check it out, test it on some stocks, and once you are happy with it, do comment and please subscribe to my channel. I'll see you in the next video. Thank you.